Okay, first video. Welcome everybody to Yak. Um, okay, starting off. I don't know how I want to start this, but yeah. So these videos are basically just gonna be like a journal for me, a journal and a way for you guys to see how I trade and it's just a learning process for everybody. Learning for you, learning for me. Everybody fucking wins. So let's do this. So plain thing. The first thing I want to say is what am I looking for in the market? There's two things I'm looking for in the market. There's AOL. What does this mean? AOL, ALI. Areas of liquidity and areas of interest. Okay? These are the biggest things. This is all that matters in the market. Areas of liquidity, areas of interest. Now, what is liquidity? Liquidity to me is in my mindset. So basically, everything I'm talking about, I'm gonna explain in the terms of what it means in my head, right, and my understanding of it. So liquidity is basically where people are buying. No, no, no. It's where people have their take profits and where people have their stop losses. So for example, um, if I was to do a trade right now, right? These are my levels for today, right? These are my two levels for today, by the way. But we're gonna get back into that later. If I was to enter a trade right now, right, I will have my I will have my stop loss and my take profit levels, right? Stop loss. This is my stop loss, right? And this will be my take profit level. Now, why are these my levels, right? These are my levels because these are again areas of interest, right? So I know that there's liquidity there. Also, where is liquidity? Liquidity is where strong moves happen. So people have their stop losses here. So for example, um, there could be liquidity down here because everybody was aiming for this little uptrend right here. If you see, I actually got into this market as well, but people were looking for. Okay, so just not to get confused, there's short-term and long-term liquidity. So people were looking for this low on yesterday, right? They were looking for this low on yesterday, and they were looking on this high. Why were they looking at these two levels? Because this was the highest level of that day. Um, was it the highest level of that day? When was this? No, this was not the highest level of the day. But at the end of the day, this is the highest of that level, right? And this is not mainly a high level. This is just a higher low. I mean, a lower low, right? A lower high. Yeah, I gotta. Okay, first video. It's just this is just a lower high. So if you know anything about structure and trends, trends make on downtrends they make lower highs, right? And lower lows. On the uptrend it makes higher highs and higher lows, right? So this is an area of liquidity because people are looking at this area for a structural play. People are always also looking for this uh level for a structural play, right? They want to see if we're gonna continue with this downtrend that has been formed here, or are we going to come to this level and break structure, right? And that's exactly what happened, right? So we rejected here, we rejected here, and people were aiming for this low right here, right? Everybody was looking for this low, but we did not reach that low. We just shot up. There was I believe buyers stepped in like right here, or the buyers stepped in like right here, I believe, and then we made this liquidity sweep. I'm gonna talk about that later, and then we moved up higher, right? So sellers basically got trapped. They basically got trapped here because this is another structure play, which I'll talk about later, and they got trapped here because people's stop losses were here. And if you see something, a crucial thing, if you see here, uh, is that there's two parts of a candle, right? There's a wick. The wick is the skinny line of the candle, and there's a body of the candle, which is the bar of the candle, right? If we look here, there was a long wick that came up above this high, and then we crashed down, right? We crashed down here, making everybody think we're okay. This prices probably came back up to sweep out this high, right? Sweep out this high, and then we move down farther and reach for that low. But no, buyers are actually trapped. I mean, sellers were actually trapped there, right? Because everyone was selling here. They got trapped out here, right? Because they thought that they got swept out here, and then buyers actually got trapped out right here, right? Because they were trying to buy back. They were trying to buy back, and then prices came up and just shot right back down, right? And this happened at 9:30, I believe, right? 9:30, yeah. I saw this live. So both parties got stopped out, but well, I don't think the buyers got stopped out. No, because they bought here. Yeah, the buyers didn't get stopped out, but it was very close. Sellers definitely got stopped out, so they got trapped. So this is also another area of interest because um people got trapped here, and now this is an area of liquidity. Buy orders, sell orders were right here. People got screwed over here, so this is also an area of liquidity. Basically, the liquidity is where the volume is, right? Where people are putting their orders. Now, the difference between liquidity and areas of interest is um areas of interest is more like the closest thing I can say about it is support and resistance, right? So, if you don't know what support and resistance is, basically this is like a perfect example here. So understand how price is moving here, right? Price is moving here, but if you're paying attention, it's bouncing off of something. It's bouncing off of this invisible line here, right? There's a green line here, but that's I had to put that there. It was never there before, right? It's bouncing off of this line, so this is an area of interest right now. Buyers and sellers are looking at this level as a support and resistance level. Now, once we broke here, we're on the 15-minute chart, but if we go on a lower time frame, once we broke here, price actually came up slightly, right uh after we broke, price came back up slightly on this bar and rejected strongly on the second bar, showing that this is yet again another area of interest, right? So the sellers won in here, and if whoever went short here won, right? What short means they sold here, they went for a sell here. So sellers came in here and they managed to bring price all the way down to this area here, right? So this is an area of interest. This is not really an area of liquidity, but this is an area of interest. Now, how will this play out in real time? If price is to come back, so this is an area. If price was to come back to this level, right? If price was to come back to this level, and buyers were to step in here, this will now become an area of liquidity. So we would want to see if this low the confirmation will be for if this low was to come back up, be retested, and either be swept out with the long wick, like what happened here, or if the bar closed under, which is showing a run of liquidity, meaning price is most likely gonna move down more, right? So that's just the main thing. I wanted to justify that because it's my first video. So there's area of interest and areas of liquidity. So if if you're still confused about it, I don't mind making another video. Let me know, and I can go straight on liquidity and area of interest. That would be like my main. That could be my main topic. So, anyways, for today main analysis, uh, my areas of interest. You can already see from here, this is an area of support and resistance, and this is the reason I'm aiming for this level, right? Now, what confirms it for me, right? I had this other tool. Let's just no, let me explain this first. I had this other tool called the Fibonacci retracement tool. This is a tool based on that, and I don't trade solely on it. I use it as a confirmation, right? I use it more as a confirmation to see if my bias is correct, right? So the way you use your Fibonacci retracement tool is going to the lowest level of a trade. So I like to go like where before the liquidity sweep happened. So if you can see buyers really stepped in right here with this big green candle, but price came back down to sweep liquidity. This is a perfect example of a liquidity sweep as well. Price came back down to take out that low before moving up. If you see here, price buyers came in here, right? They came back down, retested the low, this low, and they took everybody out before moving the market up higher, right? So that was a liquidity sweep. So I would like to, and I think it's gonna go up. I would like to chart it at the bottom of the main buyer's area to the top of where the rejection happened, right? So if you were going long, if you're anticipating the market to go up, you do it from you do your Fibonacci retracement tool from the bottom to the top. And if I wanted this to go short, say I think the market is going to move down further, I would want to go bottom, top to bottom, right? And I will move in that type of area, right? So, uh, and if you can see right here, it's trying to like this was the area of interest as well, right? If we wanted to go short here, it's trying to move down here more. And it's even showing that this 0.5 level is the area of interest where we most likely need to touch first before anything happens. So that's really my main level for today. That's a confirmation that that's my main level. But anyways, I see that we're in an uptrend right now. Do I think this is a strong uptrend? Um, I do not know because this can just be a bear flag, right? This can just be a bear flag where, oh, excuse me, yeah, bear flag where price goes into some type of uptrend, where price goes into some type of uptrend after a strong rejection. We can put it like right here. See, we don't have a second high, so it's hard to make that trend, but we can go like this, right? I like to play around to see what looks comfortable, right? So, but there's not a lot for me to play off of here because it's not a verified trend yet, right? Even though we're moving up. But yeah. So what a bear flag does after a surge of price, we start moving into this uptrend cycle before we reject stronger, break the low, and then repeats the process and keeps going, right? So I personally think that's what we're trying. What I think could happen, but I'm still just playing accordingly, right? I'm not gonna solely base my bias off of that because I don't have any confirmation yet. I'm just going to see if that does start to happen. I will anticipate the drop to be very large, and I can use that as my edge in the market to further my trade. Yeah. So excuse me. Um, that's these are my areas of interest for today. So yeah, I said this was my level, right? If we bring our Fibonacci retracement tool, I'm going to actually. Here, I wanna chart this from scratch. By the way, the videos will never when the videos will never be this long. It's just this is my first video, so I want to really explain everything first before actually getting into it for the future, right? So most of my videos gonna be like 5 minutes, 5, 6 minutes, 8 minutes, maybe. Who knows? Maybe longer. Maybe I'm just bullshitting. Maybe I do will have it longer. But anyways, the reasoning for my levels are up here was because I see there's a support and resistance up here, right? So if you see right here, price seems to really move off of this level, right? And the reason I'm using this level is because we're actually in a very high trend in the market, so there's not a lot of data for me to read up here. This is the strongest level of data for me to read off of, so I'm going to use it to my advantage, right? Which always usually works. Like even right here, this was our highest level of data for a while, right? and this is also a support and resistance line. So right here, price was really rejecting off of it. Yeah, and you see how I'm not really highlighting the wick. Highlighting the wick is good to do, but I really want to see where the money is, where the money is respecting. And if you see the money is really respecting here, right? It came over, started to reject, and then we bounced off, confirmed, bounced off, confirmed, rejected, confirmed to a downtrend, right? So that's why that is a strong support and resistance level. Um, and yeah, so I could use that in the future as well. I was using this level right here, but this is a good level as well. I'm gonna be using both these levels to see which price reacts strongly off of more. But yeah, this is an area of interest for me because uh, I see price really reacting off of it, right? You see price bounce off here, rejected here. We came over, rejected. We came up, the wick came up, right? Rejected it. We move up, reject under, confirmation, we move down, right? So this is just a strong level for me to react off of. Salud! Mama llama Eli. Okay, so this is just a strong level of support and resistance for me. I could be using this level too, but this is mostly like a and price is really reacting off of it too. So I might just leave this level here, but I don't really like it that much because I'm using it on the 4-hour chart, and I like to really do support and resistance on the 15 minute because we're day traders. I like smaller time frames, and I want to see what's happening today, right? But this is still reacting good, so I'll leave that there. My other level is right here, and this seems to be more of a stronger support and resistance line because even the Fibonacci tool is showing me that my bias is most likely correct, right? And if I do it again, okay, it was a little bit. My support and resistance was a little bit off. The 0.5, you see how the 0.5 though? By the way, the 0.5, these are the three money maker levels of the Fibonacci retracement, right? It's 0.38. This is your gold zone, your green zone, the 0.5, and your high liquidity zone. This means like price can really bounce off these levels, but if it's really aiming for that strong liquidity, it would shoot down to this 0.0618 level. And I actually like that it's going for that level because as I said, the liquidity is on this level, right? It's on this level because they got screwed over here, right? Sellers got screwed over in this area. Buyers got scared in this area. This is an area of liquidity where we can revisit. So this is a strong level as well. I'm happy that this level appeared. So I'm really gonna be using this tool on my day-to-day bias. So I am actually starting a new account, but I'm not using TopStep anymore. I got two past account on TopStep, but I wanted to try Take Profit Trader because it's a little more expensive to start an account. But if you're very confident and know what you're doing, you can just go straight into that because it's like $100 cheaper if you're not doing an activation fee. TopStep is cheaper if you're planning on resetting your account, right? I'm not planning on resetting my account. I want A plus trades. Like I want perfect trades, no other trades, right? So now that I'm here, these are my levels for today. Uh, I do believe I am breaking into range as well. So I don't really know if I want to use this as range because this was more of a pattern for me, right? This is a strong pattern for me. This is another pattern I'll be talking about a lot in the future. This is an ascending triangle where prices well, this is actually really flat. This is the price is really flat, right? Where it's moving like that, and then price usually breaks down below, which is happening here. I forget. Oh, no. This is not. This is a falling wedge. This is a falling wedge. Yeah, that's a falling wedge, an ascending wedge, because it's moving up, but the price on the bottom is staying flat. So yeah. This is a pattern frame, but this can also be looked at as a range. And if you wanted to chart this range, you would go from the start of the range to the bottom of the range. This is the start, this is the bottom because this is when price started to really move sideways, right? And we do see that there's a fair value gap here on the 1 hour chart, right? A small fair value gap. So this can be an area of resistance, but what I was mainly looking for, and I remember when I was trading this, there's a strong 1 hour fair value gap here. So I can chart this out and I can look to see this is an area of resistance right here. So I could look to go short here or I can look for something in the future, but I do like this area here. So I can see, and even up here I see that there's an hour fair value gap, but it was already filled out here, right? So if I was to go like this, I can see that price already came back up to fill it out here, right? So this is like really invalidated. I don't really want to trade this gap, but this gap was not invalidated, right? It bounced up, right? And it fell from this position, but it didn't really fill from the fall, right? It needs to fill from both sides. So if it's going up, it needs to come down and fill. But then when it goes down, it needs to come up and fill. I don't really see it doing that. This is not really a fill. This is like an actual move. This is liquidity run. So maybe we can fill here, and then we start to move down throughout the day. We can't see that, so I can be bearish on the day. We can't see if we see something here. So the way I catch my shorts is I really look for large volume like this, and I. Alright, my headset just died for some reason. Anyways, we see that it's not making a big move, right? Large volume, small candle, uh, a large red candle, smaller volume, right? So this is showing that sellers could be entering into the market. I really want to see that rejection though. Okay, we're moving up here, and I'm also gonna use my 15-minute candle as a bias, right? Because for the most people that traded in here, we talked about that 15-minute orb strategy, which is basically if you get the first 15-minute the eight of the Tokyo session, which is this candle right here, and we use it as a bias of where the market can go, right? So the market is really just booming up right now with this big green candle. So I don't really want to enter short yet. I want to see extra confirmation, like some type of fair value gap form. On the 1 minute, this is not really a fair value gap, but it's decent, right? This like if I see a nice decent red candle here, I could enter for a short real time because it will be a liquidity sweep, right? It will be sweeping out this high after sellers just came in strongly. Where was it? Right here, right? Because this was not a liquidity sweep, even though this was some sort of support and resistance here. That was here, right? On this line, because you see prices coming over, rejected. Let me show right here. So I want to see this actually come back down, right? You can see that this was some type of support and resistance area because price came over, rejected, and now it's coming back up. So now we want to see if it will come back down, retest, and move up, or do we reject under this line and move down? So this can be an area of entry, but I really want to see that extra confirmation first. I don't want to just enter because I think it's going to happen. I really want to see that extra confirmation, but it does look nice, right? If the next candle as well does not just bounce off and we close under this line, I will enter. So since it's the 1 minute, let's just I don't mind just sitting here and waiting and looking. So let's see. Why did I mark this out? I don't even remember what I did with this. Oh, this is the orb strategy. Okay, yeah. Now there is liquidity up here though, right? There is liquidity up here. There's a lot of resistance in this area, so we are prone to shorts. So we can see. I want to see the candle really close though. By the way, I said I am trying to take profit trader. I just started this account yesterday. I had a $1,200 day yesterday. Decent. I want to see if I can have that same pressure today. So hopefully I can, but we will see. So again, I'm getting that. Okay, it's starting to reject hard. I want to see if the candle closes. We got a few more seconds. So we are getting that large volume. This volume was larger, right? Which is this is not also always a good sign because this candle is larger, but the volume is smaller. This volume is smaller, but the candle was the volume was larger, but the candle was smaller, right? So let's see. Okay, closed under. We can go small position here, and I'm gonna be talking about my ATR, right? So I can go up. I'm gonna be talking about after I enter this trade. By the way, no trade is guaranteed, so don't think that your trade will not get stopped out. Because this trade can definitely get stopped out. No matter if you see this keep go right here, you see like 100, $200. I'm not gonna take profit. I want to get this to a nice area of liquidity, right? So this can either bounce here and then move back up, or it can move down to our levels, right? Our strong levels. Now I'm going to take profit here, and I will see what happens here because this seems to be a nice another support and resistance level, right? So we can see, and price did confirm here, but I want to see if we can press on it again, and we can move back down and come back up and retest here somewhere around here before making another rejection. And the reason I'm looking for this area again is because I really like this 15-minute candle strategy, the 15-minute orb strategy, where you test the first 15 minutes of the Tokyo session. This also happens in the New York session. I don't really see a lot of results in the London session, but it happens in Tokyo and New York. So I want to see price come down here, right? It's probably gonna shoot up here. Let me. By the way, when I'm drawing lines, I'm not drawing them randomly. I'm actually bouncing them off areas of interest and liquidity. So this is what I'm presuming, or I'm assuming is gonna happen, right? So if I look here, it can bounce off here. It can mess around here, right? Or we can even come up here, and it can have some type of divergence, right? And then we actually move down, 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 down. It messes around here, down, 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 down. We reach this area of support and resistance. It would be support because we're trading above it. If we were to trade below it, that would be resistance. So above is support, below is resistance. So we can bounce off here, and then we can actually retest here. This will be my re-entry. If we can see what happens if I see the same large volume little candles showing that the buyers don't have enough strength, right? And then we can move back down, and then we can aim for this area of interest, right? We can aim for that area of interest, or we can aim for what was it? What was my other level of interest? It was it here? Oh yeah, there's support and resistance here. So we can definitely aim for those two levels. Um, so yeah, we just wait and see. Those are my levels for today. Uh, I am actually gonna mark this out on the chart too. I had this level. It's at the top of the range though. For us to really come back up here, we need to be breaking into this range. Which we are doing here. So we are breaking into range here. But I want to see if a lot of times when we're first breaking into range, like first breaking it, we do usually have a rejection first. So let's see if we can actually have that strong rejection, and then we move up back into it, and then we're actually playing inside of this range. So yeah, let's see how this. I'm gonna make another video in the morning, and I'm gonna analyze the market of how things are going. Okay, catch you guys, idiot.